Every day, a lot of Nigerians are actually taking more debt and missing on their payments. When you talk about debt, sometimes debt can be a positive thing and it can also be something negative, depending on the perspective you are actually looking at it from. So, in our daily life, a lot of us are so much engrossed in, you know, taking loans, taking what I call easy buy now, pay later, collecting mortgage loans, and the rest of them. And apart from that, the fact that we are taking this money, we also find it very difficult to also meet up the deadline. And in most cases, most of us, we always default in this regard. This scenario, this conception, this idea is not a very good one for the economy. And that's why we are going to be talking about the rise of financial distress in Nigeria and what should be done regarding this, how to actually, what is actually driving this trend that is making people to take more loans, and at the end of the day, they are able to fulfill their loans obligations. So people are, taking or having or collecting loans in the area of mortgages. They are also taking money in the area of credit cards and auto loans debt. So majority of Nigerians, most especially those that are actually working in the offices where they actually take money at the end of the month in the form of a salary, you discover that most of them are actually in this category, or they are in this scenario, because before you can actually take this loan, you need to have a job you're doing, and you need to have a means of guaranteeing that that money is going to be paid back at the stipulated time. So this scenario is very peculiar with capitalist economic system or free market economic system, because under a free market economic system, the system allows people to actually take loan, to actually go for what we call credit cards, to actually go for what we call buy now and pay later, and other forms of credit facilities. So people, or most Nigerians, are actually taking more debt than what they can actually afford. Most Nigerians are taking more debt than what they can actually afford. What we're saying here, assuming you are earning 50,000 naira in a month and you are taking a loan of 150,000 naira to be paid back in 6 months or 5 months or 4 months or whatever you actually agree with the bank, you will discover that by the time the bank actually cut percentage and they actually include their interest rate and other things, you are going to discover that in most cases you are going to pay through the nose. That is, you are going to pay more, because presently now in Nigeria, paid interest rate on bank loans is about 24 point something percent, and inflationary rate is at 34 point something percent. And in this economic system, or in this economic scenario, it is not a good one for the economy. So the economy is actually hitting the bubble point, and these are the scenarios, these are the things I'll be discussing about in this video. So despite the fact that interest rate is actually about 24%, a lot of people are still taking or living in debt. You ask me, why is that? People, despite the fact that the interest rate is very, very high, people are still taking their loan. It is because of the high level of inflationary rate in Nigeria that is driving the cost of living to be going very high, and the cost, I mean, the amount of money that some household, actually earns in a month is not commensurable, or does not commensurate with the cost of living. So what we're saying here is that the amount of money you are spending is higher than the amount of money you are actually earning at the end of the month. So in a situation like that, people will have to look for other alternatives on how to actually measure up in this economic system. But there are some things that you can actually do that can actually help you in this regard, which I'm going to talk about in this video. So that you need to watch this video from the beginning to the end to be able to understand the analysis I'm going to talk about here. So the rise of financial distress in Nigeria is at a high level, in the sense that most households or families are finding it difficult to survive in this economic situation, and that's why they are looking for alternatives through credit cards, through buy now, pay later, through easy buy, and the rest of them, through mortgage loans and the rest of them. And in most cases, they are paying a lot of money. Despite the higher money, people are still collecting the loans, so they're still living in their debt. So people or most Nigerians are spending the money they do not have. Nigerians are spending the money they do not have. So what is the money that they are spending that they do not have? The money they're actually spending and they do not have are the money they take from the banks, they take in form of the credit, easy buy, buying out pay later, the loans and the rest of them. These are the money that they are actually spending but they do not have. And this has actually accelerated the rate of debt in the society. People are owing a lot of their debt. And in this topic also, I'm going to talk about how the debt has actually affected the government or the role the government is also playing and the role of the private sector in this economic situation. So the debt level in Nigeria is at the high side. It's very, very high. It has actually skyrocketed. And the effect of this is that when the debt is so high like that, you discover that other people may not have access to loans again because they need to pay off the money they're actually owing. And when they are paying off this money they're actually owing, what happens? It will slow down the economy. And that's the situation or condition that we're going to see, that the economy is actually in what we call a recession. The economy is experiencing what we call a recession. So when you hear the word recession or economic or financial crisis or economic overvalues, the economy is slowing down and the economy is not actually growing, we are talking about what we call a recession here. So consumer price index, this which is what we call CPI, has gone up drastically. People are looking for alternatives from the mortgage financial institutions and from the banks in form of the loans, in form of the credit cards, in form of buy now, pay later, in form of mortgage loans and the rest of them. But unfortunately, people are paying a lot of money to get this money. Cost of living has actually gone, higher compared to the income that most households are actually earning in a month. So cost of living is high, while the income has not actually changed. From 2018 to 2025 now, you cannot tell me that the price of goods and services are actually the same. No, they are not the same. A lot of them have actually increased in prices. And because they've actually increased in prices, most household, families have not been able to increase their income. Income is not increased, but the cost of living or the prices of goods and services are on the high side. And that's what we're talking about what we call consumer price index. So income has not been able to catch up with the cost of living. So to survive in this harsh economic condition or in this unpalatable economic condition, there are some, three factors which I'm going to postulate, which I believe that if you actually follow them, you are going to, it's going to elevate the pressure that's on you financially. But unfortunately, in most parts of the world and in Nigeria inclusive, most people will choose the third one. Number one thing you need to do to escape this harsh economic condition is that you need to cut down on your expenses. You need to cut down on your expenses. So if you have been spending 50,000 naira before every month, that means that you have to cut your expenses to maybe 25,000 or 30,000. And most people will say, how is this possible? Is it possible? Is so difficult? No, it's not difficult. It's all about having discipline yourself. It's all about discipline yourself. It's all about being focused. It's all about being determined. And you need to have what we call a workable budget. So look at those items that you don't really need that you're spending money upon and cut off those items. Maybe sometimes most people or most Nigerians they like going out there to drink beer, go to clubs, spend money recklessly and the rest of them. That means that in 2025 you need to cut down on those things and so that you can be able to reduce the financial pressure that is actually on you. So to escape this harsh economic reality, you need to cut down on your expenses. Then number two, to escape the harsh economic condition, you need to save and invest less so that you can be able to spend more. That's the second one. You need to save and invest less to be able to spend more money. So number one, I said earlier, is that you need to cut down your expenses. But in this situation, you have another option, which is the second one. In other words, the money you have actually been saving or you have actually been investing, because the economic situations are very, very harsh now, then you are looking for a way out. What we're saying there is that you can choose the second option, which is actually saving less and investing less so that you can be able to afford your lifestyle. and be able to escape this harsh economic condition. But that number two, in most cases too, most people will not choose it. Then number three one, which is the third point, is that you need to upgrade your lifestyle. And in most cases, because of the dialectical materialistic nature of society, most people will choose the third one, which is upgrading their lifestyle. Most people like living this fictitious lifestyle. They like living or looking as if they are rich, but they are not rich. They buy expensive wristwatches, they buy expensive clothes, they buy expensive cars, they go on vacations and they enjoy all those facilities, shoes and the rest of them, just to look rich, just to look impressive, just to look, take away and the rest of them. But in most cases, most of these things are actually funded by credit cards. And if you actually look at the amount of money you're actually paying in form of interest to the credit cards, you discover that you are paying a lot of money at the end of the year for credit card facilities, which you are actually going for at the end of the day. So most people will choose the third one because most people always want to look exorbitant, flamboyant, cashy, looking fashionista and the rest of them. So they will take the third one. But in most cases, the third one is not even advisable because in most cases, you might not be able to save, you might not be able to invest more. And what's the purpose of this topic? We are talking about how to actually invest your money and make more money for yourself at the end of the day. So, first one, you cut down your expenses. Second one, you reduce the amount of money you're actually saving or investing. Or the third one, which is actually upgrading your lifestyle. You spend more on luxurious items, than any other thing. People like spending money on luxurious items. They spend money on cars, expensive cars, latest cars. They spend money on what? On expensive designer t-shirts or shirts or all sorts of what of those luxurious goods. Most people like spending their money on it. And in most cases, at the end of the day, you discover that you might not be able to save or invest money at the end of the day because you are trying to upgrade your lifestyle. So people spend more on luxurious items over the years, not only peculiar to Nigeria alone, but all over the world. So people, a lot of people in Nigeria are in a lifestyle that they cannot actually afford because they want to look exorbitant, because they want to look, flamboyant, they want to look take away and the rest of them. They always engage in a lifestyle that most of them cannot afford because while you are trying to measure up with the society, while you are trying to give the impression that you are actually rich and you are not rich, you are spending a lot of your hard-earned money on those items. At the end of the day, you may not be able to have any form of savings or what or investments. The economic system is actually based on the spending the money. That's the economic system. Now you ask me, why is our economic system based on spending? You see, in every economic system, for the economic system to actually thrive, people need to spend their money. You ask me, why is the American economy is the most strongest economy today in the world? The American economy is the most strongest economy in the world today because of the spending spree of the American economy. Any economic system that is not spending, that economic system will experience what I call slow economic growth, slow economic growth, or slow economic development. Because for a country to actually develop, for a country to actually experience what we call economic growth, then the economy needed to be boosted, the economy needed to be accelerated. People need to spend on in the economic system. So government spend, individuals spend, private sector spend, everybody spends in the economic system. So the amount of money you actually spend will determine whether the economy is going to be accelerated or the economy is going to be very, very low. So in Nigerian system, our economic system is experiencing what I call recession as well, which I will explain later in this topic. Or let me talk about a little bit about that. Well, now when you talk about economic recession, you see a lot of people are borrowing money. They are borrowing money. They are borrowing money from Easy Buy Now, Pay Later. They are borrowing money from the private sector. Government is also borrowing money at the end of the day too, because in every financial year in a country will always experience what we call a deficit budget. Deficit budget. Now, how does the government fund deficit budget? It means that the government will have to borrow money as well. They borrow money from the World Bank, from IMF, and the rest of them. Why they are borrowing this money? They are spending that money. Nigeria spends money, America spends money, UK spends money, France spends money. So the more you spend money, the more the economy is going to be boosted. Now, you see, Nigeria's GDP in 2024 is estimated to be around $253 million. $253 million, which is $253 million of what? Of spending. So when you say Nigeria's GDP is actually $253 million in 2024, it means that the GDP of Nigeria, or the money Nigeria is going to be spending, is $253 million in their spending. So the longest spender in the Nigeria's economy is actually the government, not Dangote, not Nestle PLC, not all those conglomerate of companies that are actually in Nigeria, but it's actually the Nigerian government that is the highest spender in the Nigerian economic system, because the government actually prepares the budget. Government does what we call expenditure and the revenue. We call it expenditure and revenue, and the rest of them. We talk about budget and the rest of those monetary policies and all those physical policies. So the biggest spender in every economic system is the government, including Nigeria. So government spends money. Now the question is, government will have what we call a deficit budget. So government will also need to generate money. In most cases, most of the money that's actually being generated by the Nigerian government is actually generated through what we call taxes. You see, taxes. Now we all pay taxes in Nigeria, whether direct taxes or indirect taxes. And in most cases, when you don't pay the tax, it's actually what a punishable offense in Nigeria and other parts of the world. So you need to pay your tax. So the government generates money or generates revenue through what we call taxes. But you need to understand that the government of Nigeria, let me put it in this way, government's budget or Nigerian government's budget for 2024 is actually 27.5 trillion naira. You see, that is the budget for 2024 is actually 27.5 trillion naira, with an estimated revenue of 18,032 trillion naira. See, this is now the budget is actually 27.5 trillion, while the estimated revenue is what is 18.32 trillion naira. That means that money is not complete. You are proposing 27 million and you have 18 million. So the question is, where are you going to get the rest of the money? And that is where the issue of deficit budget actually comes in. Government will need to source for that money. Government will need to borrow that money. So at the end of the day, we said that government's estimated budget for 2024 is actually 27.5, while the estimated revenue is actually 18.32 trillion naira. So we have a deficit of what we call 9.18 trillion naira. Do you see now? So that means that the government might not be able to meet up with the expenditure, because the revenue is lower than the expenditure. Just like when I started, I said most households are earning lesser than what they are actually spending. You see now? So government too is going to earn lesser than what it's going to spend. You see now? So this scenario is not only applicable to household alone, but also applicable to the government. So government is also having what we call a deficit budget of 9.18 trillion naira. So the 9.18 trillion naira is actually a deficit budget. You see, a deficit budget. So government will need to source for that money. So this means that government will be spending the money that it does not have. You see, government will be spending the money that it does not have, because why? Government will need to fill up that gap of 9.18 trillion naira, and it means that the government is going to borrow money. So not only household individuals or households are borrowing money, government is also borrowing money. We're going to see the implication of this money that they're actually borrowing. The 9.18 trillion naira, which is actually the deficit, will not be generated through taxes. So what this means is that the government will have to borrow this money. You see, so government also borrows money. They'll borrow money from the banks. They'll borrow money from from IMF. They borrow money from China. They borrow money from international organizations and the rest of them. They also fill up this deficit budget. So the money that's going to be borrowed by the government will be used to boost the economy. Like I said earlier, you need to spend money. Government needs to spend money. So when they spend money, the economy is going to be boosted, the economy is going to be robust, it's going to be dynamic, it's going to experience what we call accelerated economic growth. But when government don't spend money, a lot of every sector of the economy is going to be affected because government will not spend money because government is paying its debt. The private sector will not spend money because they are going to use the money to pay their staffs and some other things. Then the household individual is not going to spend the money also because they are going to settle their debt as well. And what is going to lead to? It is going to lead to what we call economic crisis in the economic system. And nobody knows when this bubble will actually burst. You get it now? Nobody knows. You get it now? So, but on the other hand, government needs to spend money. So, however, this money will have consequences on the economy. The money that the government is going to spend is going to have consequences of the economy. In that, if the government spends too much money or pump money too much into the economic system, it's still going to have a negative effect. And what is that negative effect? It's what we call inflation. Inflation. So we have deflation, we have stagflation, we have inflation and the rest of them. I've discussed all these things in my previous topic. So if you want to watch this video, go and watch my episode. Yeah, all these videos are on my YouTube channel where you see all the videos that I've done on the nature of this economic system we're talking about here. So the consequences of spending too much money or pumping much money into the economic system is actually what we call inflation. When you pump more money into the economic system without a corresponding availability of resources to meet up those things, it's going to create what we call scarcity. And when there's actually scarcity, it means what? That the price of goods and services is going to increase in society. So while you are spending money into the economy, it must be able to commensurate with the available goods and services in the economy. So we also live, in a credit-based economic system where people have access to loan. If you remember when I started this topic, I was saying that capitalism or a free market economic system allows people to have access to loan, to have access to buy now, pay later, to have access to what we call easy buy and the rest of them. But the effect of these things is what we're talking about here, in that the interest rate is actually at 24 point something percent. So if you are borrowing money from the bank now, you are paying a lot of money. If you are borrowing money for easy buy or buy now, pay later, or for mortgage financial institutions, you are going to pay a lot of money. So when you actually take this money from easy buy now, pay later, and these credit facilities and the rest of them, it means that you are spending more than the money you are actually earning. Do you understand now? So when you buy this money, you get this money, you get these loans. Most people are always jubilant, they're always happy, they're always excited that they have access to loans. But if you calculate the amount of money you are paying on loans, you realize that we are paying a gargantuan amount of money, which in most cases might even be higher than the money you're actually borrowing as a loan. 24 point something percent interest rate on a loan is a very big amount of money. If people borrow more money from mortgage financial institutions, it means that the economy is going to be booming. The private sectors borrow money from mortgage financial institutions, the economy will also boom. If the government also borrow money from the private sector, the economy is going to boom. Because why? The purpose of this is to spend their money. When you spend money, the economy is what is actually robust and very, very healthy. A lot of us don't even ask the question, how do we experience economic growth? When you say the economy is growing, the economy is healthy, the economy is robust, the American economy is experiencing growth, 3 point something percent growth or 1 point something percent growth in the first quarter or second quarter or third quarter or fourth quarter of the year, or they say the Nigerian economy is experiencing 0.2% growth in the first quarter, or the banks are saying there is an increase in the growth of the bank's profit in the second quarter or the third quarter in maybe 2 point something percent or 2.5% or 2.0%. Most of us don't even ask what is responsible for this economic growth. Number one, economic growth is as a result of government debt. I said earlier that Nigeria's budget is actually 27 point something trillion naira, and we have a revenue of 18 point something trillion naira, and we have a deficit budget of 9.18 trillion naira. That means that government is going to borrow money. So the economy is stimulated as a result of what? Of government's debt. Number two, the economy is stimulated as a result of private sector debt, including you and I, that borrow money from the credit, from the mortgage financial institutions, from the loans we collect, from easy buy now, pay later, and the credit cards. But unfortunately, too much debt can become a problem. You see, too much debt can become a problem to an individual. Too much debt can become a problem to the private sector. Too much debt can become a problem to the government as well. When debt becomes too much, it becomes a problem, becomes a burden that in most cases, if care is not taken, you may end up for the entirety of your life, paying back on the debt, paying back on the debt, and paying back on the debt. Like some people I know, that most of them, godly or foolishly or unknowingly, they actually collected some loan from their friends, and till today, some of them are still paying that money, and they are regretting. But unfortunately, the agreement has been signed that I'll pay this money. Do you see? So when you're taking a loan, be very careful the kind of loan you're taking. Go deep into it and analyze it in total to understand the in-depth analysis of what that loan is actually all about. Because most people, they're always after the money, but they don't know the implication of that money. How much are you going to be paying back every month? How long are you going to pay the money? What's the interest rate of that money? What are the hidden charges of that money that you don't even know? But because you wanted the money desperately, you godly collect the money. At the end of the day, you end up blaming yourself. So, too much loans is actually a problem. It becomes a problem to an individual, to the private sector, and also to the government. So, it will lead to what we call a breaking point when you cannot actually borrow more money. There are some of us that when we get this loan, it will get to a point that the bank will not even give you any loan again. They will tell you, pay the ones they have actually collected. On the private sector, the same thing applies. On the part of the government, the same thing applies. If you're unable to meet up, then you also face some consequences, which is a penalty or for defaulting on the payment of the loan. Unfortunately, in Nigeria also, the government is paying a lot of money servicing loan every year. A lot of money of our country's budget is being allocated for the servicing of loan every year. And you wonder what is actually going on. You understand? That's a topic for another day. So, at this point, if your access to loan is actually limited as an individual, it means that it's going to have a consequence on the economy, that because you are not going to be able to spend the money. The same thing applies on the part of the government. Government will not be able to spend more money into the economy or be able to pump more money into the economy, because on this other side, government is trying to pay off his debt. So at this point, the economy may not be doing, and businesses are not making more money either in this situation. This would lead to what we call a bubble busting. This is a period we actually call the economic recession. You see, economic recession. So when you hear the word economic recession, it means that the bubble has actually blown up. The bubble has actually busted. So when it bursts, it means that there's economic recession. Economic recession, one of the reasons why it occurs is because government cannot spend more money, individual cannot spend more money, the private sector cannot spend more money, because they have to pay off their debt for them to be able to have more access to debt in the future, to be able to have more access to loans in the future. The bubble can burst at any time. I remember in 2008, there was a burst. In 2020, there was also a bubble burst. Then in the year 2000, there was also a bubble burst. Do you get it now? A bubble burst. So in year 2000, 2008, and 2020, there was an economic burst. Do you get it now? That is, there was economic recession all over the world. The one of 2020 was actually caused by because of this COVID pandemic of 2019. It affected 2020, and most economic system in the world at that time, they experienced what we call the economic slowdown. But in some country, it created opportunity for people to actually make money, because in some countries, government was actually paying them, and at the end of the day, most of them, because they have more money now, they were able to spend more money, more money. That after the recession, the money was no longer there, and because they were used to spend more money living this extravagant and flamboyant life, they had to go for credit cards and the rest of them. And that's why when you're actually going for a credit card or doing all this buy now, pay later or easy buy, you are making other people to be very, very rich and making yourself to be very, very poor. Nobody knows when the economy is going to burst or when the bubble will actually burst. It happened in 2000, it happened in 2009, it happened in 2020. It can also happen in any time, any moment. Nobody knows. And that's why no government always wanted to be associated with economic recession. They always try to avoid it at all costs. And that's why in most cases, government will always pump more money into the economic system. To avoid this problem, you need to be financially smart. And that's why I'll be giving 4 suggestions on what you can actually do to avoid this financial meltdown or this financial ulubalos or this financial crisis that is evening or affecting every part of the world. Number one, you need to live below your means. That is, you need to reduce your expenses. Living below your means, you need to cut off some certain things that actually, creating holes in your pocket by, like, for example, you need to avoid, this buy now, pay later, easy buy, loans and everything. I'm not saying that it's not good to actually take loan. You can take loan, but if that money is not meant for a business venture or that can create more money for you, you don't need to take that loan. Number two, you need to have a cash reserve. Cash reserve. You see, in most cases, in most situations, people don't have cash reserves, and that's why they always use credit cards to buy most of the things that they wanted to buy. So you need to have a cash reserve. In other words, anything you're going to buy, you need to use your money to buy it. You need to use your own money to buy it, not credit cards, not buy now, pay later, or easy buy, or loans, or mortgage loans. Use your personal money or your cash to buy that thing, not credit cards. Then you need to have or create cash reserve for investment opportunities. You see, in a period of economic meltdown or economic recession, it creates more millionaires and billionaires. Do you understand that? Because at that period, a lot of people, because of this panic and fear and phobia and the rest of them, they might need to sell their stocks, they might need to sell a lot of things. And that's why someone like Warren Buffett will always wait for positive of economic recession to buy most of these things, because over time, most of these things are going to jump back or they are going to appreciate back in the value. Do you get it now? So you need to have or create some cash reserve for this financial opportunity or investment opportunity. Then number four, you need to have what we call financial education. When you have financial education, you can be able to invest your money wisely. You can be able to invest your money and make more money for yourself in 2025. 2025 is a year of millionaires and billionaires. And if you want to be part of these billionaires and the billionaires and millionaires, you need to understand how the economic system actually works in the economic system, which is the free market economic system. You see, free market economic system, if you don't have financial education, you might not be able to understand the dynamics of the system. You might not be able to invest your money wisely. You might not be able to save some money. You might not be able to, to retire well in the future. But if you have an idea of this financial education, you can be best assured that while you are actually, going through a decade of sacrifice, you are building a very prosperous, wealthy, rich future for yourself. Because at the end of the day, your money is going to compound and it's going to create more value for you. And when it creates more value for you, it means that all those things you have actually denied yourself while you're actually, investing your money, now that your money is actually working for you and growing for you, you can afford those things in the future. And that's why financial education is very, very important. I hope you have actually gained something in this video. If you have gained something, please subscribe to this video and share the video to the outside so that you can have an idea of what financial education is all about. You can have an idea on how to invest your money. You can know where to actually put your money and know where to put your money. It's not about living a flamboyant life or a extravagant life or living recklessly. It's about building a financial legacy, a future for yourself, a future for your children, a future for your grandchildren, and creating a legacy of wealth and wealth creation. Till I see you next time. Thank you and God bless you.